I'm Matt Bishop with NAREIT here in New York City at the Waldorf Astoria Hotel for REITWeek 2016, NAREIT's Investor Forum. Joining me for this CEO Spotlight is Don Miller, the President and CEO of Piedmont Office Realty Trust. Don, thanks so much for joining us.
Matt, thank you for having me.
Now, the office sector has experienced major disruption in the last decade or so in terms of tenants' needs and preferences for space. What's been the most challenging part to adapting to these evolving changes?
Probably the biggest challenge that most people think about is how space has changed in terms of going from four walls in an office to open space and creative and collaborative. And I think that is a challenge, but that is mostly addressed easily by the fit out that the tenant gets in terms of their tenant improvement dollars. I would say by far the bigger issue from that standpoint has been the density that we've seen come in, and the impacts that has on the capital necessary for the landlord to get the building positioned properly. So it has impacts from parking, of course, to something as simple as restroom capacity, to HVAC distribution. So all of those things impact the capital necessary to keep the building up to standards that the tenant is looking for.
And how do you feel about the current state of Piedmont's balance sheet?
The balance sheet has been a highlight for us over the last several years. So we started off with an extremely strong balance sheet when we became publicly traded. We went through a period of time where there was a lot of rollover in our leasing, and as a result we had to spend a lot of capital and we had some downtime. So some of the measures like net debt to EBITDA went up to levels that were a little bit higher than we would have liked to see. And what we've been doing as we've been releasing the portfolio is bringing those levels back down. And so now we're at a metric of about 6.5 times net debt to EBITDA. Our fixed charge coverage ratio is fantastic at over 4 times. We have a very solid debt to gross assets level, and most importantly probably we have more unsecured debt than secured debt, which was just the opposite a few years ago, and a very nicely laddered maturity schedule. So we're very happy with where the balance sheet has gotten to.
And if we were to sit down again at REIT World in Phoenix at the end of the year, what would be the dominant story or trend involving Piedmont?
I hope the dominant trend would be 6 months from now to be talking about the fact that we've had a continuation of the things that we've done well for the last several years, whether that be recycling of capital, where we've been taking assets that were non-core, non-strategic, and recycling those into assets that are in places where we feel like we've got a competitive advantage, whether it's our boots on the ground, relationships with the brokerage community, a strong corporate presence, and a strong economies of scale within the number of buildings we own there. We also hope that continuation of the theme would be around the continuous leasing activity that we've been getting done within the portfolio, and as a result, the cash flow growth that we've seen that's taking place in the portfolio over the last several years.
Don, thank you so much for joining us.
Well, thank you, Matt. Appreciate it.
For more from REITweek 2016, be sure to visit REIT.com.